All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for the 22nd of January 2024. Our next lesson today is going to involve a couple things that really bother me. You guys will know this, but I'm also going to use one of our own returns. Our lesson today is averages. Okay, I do this all the time and it's so much fun, and I'm finally able to start a little lesson to you on averages are not your friends. Really quickly, if you average a 50% return and then a 50% loss, what is the average return? And it's pretty simple. What's your average return if you average a 50% return 1 year? And we'll call that year one. We'll say in year one, and then a 50% loss in year two. What is your average return? And it can be reversed. If you want to have the loss first and then the return, it doesn't matter. But yes, plain and simple, your average return is a 0%. Does a 0% return equal your portfolio got back to break even? Because that's the catch. And this is what bugged me about the industry. It bugs me about how people talk about portfolio growth. You can take $1 and you multiply it by itself plus the 50% return. So that's where you get times the 1.5, and it equals a $1.50 growth in your portfolio. But then a $1.50 loss, then $1.50 minus a 50% loss equals only 75 cents. Going back the other way, let's say you lose it first. Let's say we take all of this. Say you take your dollar and you multiply it by the 50% loss, means that that dollar is only worth 75 cents. But then you have a 50% gain, right? But then you make the 50%, or you multiply it times 1.50. And I'm sorry, if you take $1, it goes down to 50 cents. Have to do my math right. That also equals 75 cents. This will happen in a 3-year, 5-year, 7-year, 9-year, 10-year rotation basis. The returns are a 0% return. Portfolio growth is down 25%. So I'm going to say it as simple as I can. I'm going to say it as politely as I can, because there's some people out there, again, that are like, well, you're so mean to everyone else. These are just facts and numbers. If anyone is ever giving you an average return, that means one of two things. They either have never cared enough about their clientele to work those numbers to find out what real returns are, or number two, they're just too stupid to know how to work simple numbers to care about what the real returns are for their clientele. This is what bothers me about the industry. This is again where I'm willing to tell people, and if it's rude, it's rude. I don't care, because I'd rather be rude and be honest than be polite and lie to your faces. This is something that bothers me about the industry. Averages are not your returns. Averages are not portfolio growth. Averages are a very polite way to sound smart when you don't care about your clients' portfolios, when you're not willing to put the effort into it. There's one other thing that really bothers me. Annualized returns. So just for Hurley Investments last week, we had 100% returns in all trades. We also annualized our first trade findings and adjustments trade, which was long puts on Boeing. Boy, love that. Long puts on Boeing. And we have the trade right here. So let's poke a little bit of fun, and let's do this in jest. Taking a quick peek, then I'm going to grab a highlighter. We got into the trade at roughly 9:23. We got out at 9:55. My first question to you guys, how many minutes were we in the trade? And you can round out those minutes. Entered at 9:23. Got out at 9:55. Anybody? You guys still able to hear me? How many minutes roughly were we in the trade? 32 minutes. Perfect. I'm even go, it could be 31 and a half, 31 and 45 seconds. Let's just make it 30 minutes. Thank you, Maud. So we are in the trade for 30 minutes. Doing our simple math, we got out at 9:40. Geez. We got out of the trade at 9:45. Market order. We entered the trade at $8.20. That comes out to $1.25 of profit, divided by the $8.20 equals, I'm pretty sure it's 15.14. Let's run a calculator and let's find out. Yeah, I should just be running it on here. Let's not run it any other way. Let's run a calculator right here. We're going to take $9.45 where we exited the trade, subtract out our debit of $8.20. That equals $1.25 divided by our cost basis of $8.20. 15.24% return on investment. Return on investment. Per every contract, $125, right? Not a bad trade. So anyone that had Apple, we took that Apple grouping, and if you had Apple but no Boeing, we took a profit. If you still had Boeing, we kept it in. But the short answer is 179 contracts for Apple owners made $125 per contract, or a 15.24% return. Would you like to know what that is annualized? Anyone want to know how good Hurley Investments is if we annualize the returns? There we go. Thank you. So Mary's like, I want an annualized, yet Maud, my women here tonight, no, because it's a phony number. You are correct. So how many half hours are in there in the 7.5 hour of the, yeah. How many half hours are there in a single 7.5 hour trading day? Well, you take 7 hours because you can divide that by half, and that's 14, and you get plus the other half hour, so they're 15 half-hour increments in the trading day. So if we take 15 and multiply it by the 15.24% return on investment, your daily return, which is not bad at all, comes out to a 228.6% daily return. 228.6 times your 5 trading days. Of the week. Just multiply that times 5. Yes, we had a 1,143 weekly return on investment. You take your 1,143% weekly ROI and you multiply it by the 52 weeks, possible trading weeks in a year, and holy crap, you have a 59,436% return on investment annualized. So it's funny because Russ Kramer says, what was a canceled trade in the middle? We tried to set a close rather quickly, and they weren't registering it because we were trying to do $9.30, and we were just actually trying to get $1.10. But we couldn't get the trade registered. Boeing was falling rather quickly that day. So we finally said, "Gall, we're above our $1.25. Let's just do a market order." It got closed out at $9.45. But just to let you know, for all those people out there who love to talk about annualized returns and this and that, Bill, please send this to your brother. We last week we were at 100% closing ratio on every trade that we did, and we had one trade with an annualized return of 59,436% return in the first 2 weeks of trading, the first half of the year. And there you go. So it's kind of funny because that's the funny part of this, right? I really wanted Lee Maxwell to be here tonight because he's like, Kevin, would you guys start doing a couple more spread trades in my account? Russ, it doesn't matter how often you think you can repeat this trade, because in the education and all those newsletters, this is what gets reported. And not only that, it's usually something that's happened 8 to 12 years ago. Well, we once had an annualized return of 59,436% return. Can it be repeated? No, it cannot. This is not a standard trade. This was us thinking, okay, this year we're trying to do a little bit of arbitrage. I went over this trade last week, and our comment was, hey, Boeing is really tanking. The state's going to be okay with those people who are an Apple of placing an arbitrage trade against Apple using Boeing. So we let the state know we were looking at doing things a little bit differently, being a little more aggressive. And yes, the other day, it's kind of neat. The market was down a negative 0.37, and our clientele is up a positive 0.42. So we did a really good job of being in the market, of beating the market last week, and we beat the market last week handedly. But this is the problem with our industry. Annualized returns, averages. I mean, one of the worst things that I've seen, and this comes to pip trading, currency trading, commodity trading, you can literally have 40 successful pip trades and have the 41st be a loser and give up everything you gained in the previous 40 winners. Which means, in all honesty, you can have a 98% success ratio, but the one loser, that 2% or 2.25% losing trade, 2.25% of your trades that go wrong, eat up everything that you've gained from all your winners. This is the ridiculousness of average returns, of not having someone be honest with you. I'm going to put a quick YouTube link in here just because it's important. Where I'm going to go to playlists, and I think I have it in my short videos. The real rates of return.
Here are in
I'm going to put this link in here. It's only a 3-minute video, but just taking a quick look, I'm going to do a real rates of return, and I will put this link in here so that you can see just how phony in the lost decade that happened in portfolios, where we went to 12.5 to 13.5 years of a lost decade of returns, as we just, as people just created ridiculous commentary to hide the fact that our US S&P 500 had zero growth for 12 to 12.5 years. Earnings bar is low, but valuation hurdle is high. What this means, it'll be very difficult for earnings coming up into this year. Very easy to beat on the low side, but valuations are high, so there's not a lot of growth that you're going to be seeing in stocks this year. What does that mean in plain English? In plain English, what that means is that people need to be looking for an opportunity to, you need to be looking for the opportunity to find low price stocks that can move higher. That is the short answer of this year. Something I found that was pretty interesting and a little bit shocking and I'll put the link in for this one too. 71% of all S&P 500 companies underperformed the S&P 500 average last year, and 61% of all S&P 500 companies are down year over year. So rather interesting that there's a lot of companies this year that have that big upside potential. And that's what we're going to be looking for as we're going into this year. Earnings dates, we have them listed in here. This is the second week of our banking week. First real week of earnings. So after this week, we're going to have 4 weeks where the S&P 500 crams like 83% of all the S&P 500 earnings will come starting next week. For this week, we had Zions Bank after hours today. Tomorrow, we've got GE, Lockheed Martin, Verizon, Intuitive Surgical, Netflix, Tesla on Wednesday. We have Visa on Thursday, Clorox, CL. I don't know what's CL. I won't say that's Clorox on Friday. And then for the next 4 weeks, we're just going to run into massive earnings. Economic reports, durable goods and GDP on Thursday, personal income, personal spending on Friday. That will run the futures and set the tone for where our stock market can go for the day. On our indexes, we are bullish on all of our indexes, but we're bullish just touching overbought, but we are breaking out to new highs. S&P 500 bullish, but just touching overbought. And on the NASDAQ, bullish, just touching overbought. Can earnings push us farther higher? Of course they could. And that's something to pay attention to. Found some very interesting articles because a couple of you asked me again about Baidu and Chinese stocks. Chinese stocks are very cheap. Why are investors jumping in? The short answer is investors are not jumping into Chinese stocks because the current Biden administration has made Chinese investing rather fearful. Yes, if you were going to take away ADRs, it would be about a 1.5-year process to make that happen. It's not in anyone's benefit to do so, but that is the threat that's getting put out there. So Chinese stocks are very cheap, and why investors aren't jumping in? The fear of ADRs being pulled off of the index, which is about a 1.5-year long process, and it's currently what is most being used by the Biden administration at the White House. That is why Chinese stocks are a little undervalued slash may not be the best investment right now. I found a very interesting article. Baidu is a trending stock, facts to know before betting on it. An awesome article from Zacks, which I'm not a fan of Zacks, but an awesome article on some of the numbers year over year and how it just has been beaten down for no reason. If you like the numbers, here you go. This is a YouTube video again. Artificial intelligence, growth stock down 68%. You'll regret not buying the dip in 2024. Yes, that's talking about Baidu. CL is Colgate Palmolive. Thank you, Bill. Very interesting article. Senator Mike Lee won't vote yes to fund the government until a border deal is in place. As you're looking to see the fight this year between Republicans and Democrats, it will most likely be over the border. I can't believe how many immigrants are coming across. I can't believe the hypocrisy of states that don't deal with border security and how they are requesting or wanting illegal immigration to occur. I do think it's kind of funny when those states then have bus shipments of these illegals sent to them, how in less than 6 weeks their cities can no longer handle them. So this will probably be one of the battlefield type of commentary between who you choose to vote for when it comes down to the elections in November. With that said, questions. What questions do you guys have that I can answer for you? What questions do you guys have that we can answer for you? Yes, and so that's a very good question. We apologize. Trade findings and adjustments did not go out to everyone last week, but the IWM covered call strategy or protective put strategy can be closed for a profit today. So we were just talking about the Russell 2000 and how it normally has a first quarter run. For those of you who are into trading on your own, an IWM covered call strategy or a protective put strategy, both can be closed for a profit today that we talked about last Thursday. Maybe it's 2 weeks ago. So it's probably 2 weeks ago that we talked about it. But yes, that is available and you can close both of them for a profit today. We do not have ours closed yet. No, we actually took profits on the puts on the way down and took off our covered calls last Thursday. But yes, we will make sure that everyone that has requested the link to register for the trade findings and adjustments, we will make sure that we have those in for this Thursday. Great question, and I don't know if I've got the best answer for you, but the comment is, how much should we trust the NASDAQ to keep going up? How much should we trust the NASDAQ will continue to go up? Sky's the limit. Sometimes I feel like we are on abyss borderline. So don't forget the NASDAQ had like a 44% drop one year, a huge drop one year, and we're just recovering back up to those highs. The NASDAQ is much like the S&P 500. The Magnificent Seven fueled 70–80% of the growth of the index last year. So if we don't have growth in other areas, we don't have growth in the chip stocks and the AI companies, then yes, the index is stretched. The growth is not across the board. The growth has been from the Magnificent Seven. So how much growth is in there? There's a lot of growth in there. There's a lot of growth because there have a lot of companies that were not moving last year. Chip stocks, wafer stocks, computing chip stocks, AI chip stocks, a lot of those others that are part of the components to artificial intelligence have not moved. So there are large opportunities, but those opportunities probably won't come in NVIDIA, Tesla, Google. I was going to say Facebook, but Facebook still does have run to room. Apple's high side is about 213, so you probably won't see that growth in Apple. Amazon's been beaten down, but Amazon has no margins and no big profit. So I don't see the growth coming in Amazon either. So yes, the reason why that feels like we're just looking over the abyss is because last year the growth was truly fueled by 7 stocks, which is a little scary that we can't rebalance our indexes and that we allow that to happen. Good 2 questions. Are there any other questions? All right, thank you very much. I appreciate it. Yes, I am fighting a cold, but thank you guys. I hope this was helpful. We will have this posted relatively quickly so that you guys can look at it. There will be a couple different YouTube video links, so please go to the myhurleyinvestment.com and feel free to look through some of these links so that you can understand how those averages are not your friend. Have a good night, everyone. Talk to you later. Bye-bye.